Nicholas Weindling is the manager of the JPMorgan Japanese Investment Trust. He joins me now. Nicholas, first of all, as you look at the Japan market, what's your outlook for 2020?
The outlook for 2020 is pretty good. The great thing about Japan is that it's very politically stable. It's a big contrast to what you see going on in the rest of the world, London or UK, for example. And that stability is allowing many things to change in Japan. So things that were set in motion a few years ago, you start to see, and I think in 2020 we're going to start to see even more of the rewards being reaped. Some examples are, we've seen a big surge in tourism over the last few years. In 2010, 8 million tourists came to Japan. Last year, that hit almost 32 million. So you're looking at a fourfold increase in 10 years. Obviously, we've got the Olympics coming up in 2020. Very exciting for everybody there. But you look at other areas, for example, things that I never expected to see in Japan, like a big increase in the female participation rate in the workforce, which is now way in excess of the US. We'd expect that to continue. And I think most important of all, there have been significant improvements in corporate governance over the last years. But actually, I think that's still in quite an early innings, and we're going to see that come through even more, not just in 2020, but actually in the next few years.
Those are the positives. What are the potential risks out there?
I think for Japan, most of the risks lie outside of the country and are really beyond the control of the Japanese authorities or the companies that are there. It's quite an economically sensitive stock market, more so than Europe or the US. About 60% of companies have cyclical earnings. So, for example, if US-China trade tensions were to ratchet up, or if tensions in the Middle East were to get more serious, then that could end up having an impact on the stock market overall. Although I'd caveat that by saying it wouldn't have such a big impact on the trust, where we tend to have fewer of those very cyclical type of businesses.
And as you look at the investment opportunities, you're big on investment themes. What are the main ones that you're buying into right now?
Yeah, we do have a lot of investment themes in the portfolio. I should say it's a very bottom-up process, and those themes are a product of the research that we do. We're really looking for the very best companies in Japan, but even if they weren't in Japan, they would still stack up as being global leading companies. But there are areas where Japan is certainly very strong, such as automation or use of the internet, which is still at quite an early stage. I think surprising for many people because they have an image in their mind of millions of people crossing the road with neon lights around them. And actually, Japan is lagging in some of those areas. Tourism, we expect, obviously, to continue. These are, and even things which some people think of as being a negative, for example, the aging population, actually throws up huge investment opportunities.
Well, let's pick up on some of those. You mentioned automation. Have you got an example of a stock in the portfolio that really, I guess, sort of ties into and expresses this theme for you?
Yeah, absolutely. Keyence is the largest holding in the trust. It's actually been our largest holding for about 8 years. If you think about the things we're trying to do at JPMorgan, and what's different about us, one is that we're all based in Tokyo. The other is that we're trying to take those long-term views about where companies are going and industries are going. So Keyence is a very good example of that. It's global number one in sensors used in factory automation. It's still, we still expect to see a lot more automation in not just things like car industry, which has always been quite automated, but other things like food, pharmaceuticals. They're growing very rapidly overseas. It's a very good stock for us because it has very high margins, well over 50%, 50. It's probably one of the most profitable industrial companies anywhere in the world. They do simple things like they pay their employees based on performance, which I know here, sitting here in London, seems like, well, an obvious thing. But actually in Japan, still many companies pay people more because they got older rather than because of a good job that they did. And so Keyence, not only is it play into that increasing of a factory automation, but it also exhibits other characteristics that we're looking for in the stocks in which we invest.
What's it got around itself as a moat that can stop somebody else coming in, doing the same job as them and thinking, that's slightly lower level of profitability, we'd be happy with 30%?
Yeah. Well, I mean, the number one problem in Japan over the last few years is that's exactly what's happened. So Japan used to be the world leader in shipbuilding. It used to be the world leader in steel. It used to be the world leader in consumer electronics. And all that has gone to, whether that is Chinese or Korean or US competition by Apple. That's exactly what's happened in Japan with Japanese companies. So there's nothing that we're more aware of than that potential competition. But in Kientz's case, that's a consulting business model where they make suggestions to clients about how to save money, and they embed their employees in the client factories. Competitors, which we've looked a lot at, such as Cognex, they haven't been able to do that. Also a much more capital-intensive business. Similarly, ABB or General Electric, global competitors. In factory automation for them is just one division of many. And Kientz is solely focused on sensors and factory automation. And we believe that gives them a very strong moat.
And you mentioned tourism and brands. One of your largest holdings is fast retailing, which I think is we'll know on the high street as Uniqlo. Why do you see that as a growth business when so many people are struggling on the high street?
Right, well, fast retail, Uniqlo, as people know it, as you say, is at quite a fortunate stage in its development because it's much later to move overseas. So if you think about H&M or Zara, they already have many, many stores on the high street here. And I think many people would say they're probably overstored as shopping moves online. And for Uniqlo, they do have that problem in Japan and they are shutting stores. But when it comes to going overseas, it's quite a different landscape. And especially in China, they are expanding very rapidly. It's a very popular brand. It's very good quality, reliable, well-priced. They're also able to tap straight into e-commerce in those markets, selling online. They can almost skip the step of opening the stores. That's one aspect of Uniqlo. The other one, which ties back up to other themes that we think about, which is the aging population, whereby in Japan, they are way ahead of the competition in the levels of automation that they have. So they have just opened a very large new warehouse where they've cut the number of people who work there by 90%. And there's a strong imperative to do that in Japan because there's simply not enough people to do the jobs. And if you can afford to invest, you get a really strong competitive advantage from it.
Well, you mentioned that issue of the aging population. I think there's 125 million people in Japan now, and that figure's only going to go one way over the next few decades. How do you make money out of that as a trend?
Right. Well, the beauty of the aging population in many ways is that it's so certain to happen. Like we know, in fact, I've known for my entire investment career that that's the backdrop of Japan, and that it's clearly bad news for a large number of companies because demand is certain to fall. But all we need to do is find the small number of companies for which it's good news for. Ultimately, we own 60 stocks out of a potential 2,000 just on the main market. And there are very obvious examples of how to play the aging population. So, for example, the market for adult nappies is already bigger than the market for baby nappies. It's a very consolidated market. But there's much more nuance than that further down. So in many companies, a lot of employees are coming up to retirement right now. There's lifetime employment in Japan. So up until this point, those companies haven't been forced to become more efficient. But as they retire, they are forced to outsource more work, use more online services. And that is really just hitting an inflection point. And I think very, very attractive backdrop for companies like Obic, which is a company that provides in computer support for small and medium-sized companies. And they just can't do it internally anymore. It's the certainty of these happenings that makes it so attractive.
And you also, I think, mentioned the internet. Japan is actually quite a long way behind on the use of the internet compared to the Western world. Again, what are some of the growth opportunities you see there?
Right, well, you're absolutely right. That especially I find in the West, there's an image of Japan as being very technologically advanced. And there's no doubt in some areas that it is. But in others, Japan is lagging behind. And the internet is a prime example of that. So if you look at e-commerce penetration rates in Japan, they're probably where the UK was, say, 10 years ago or so, still probably around 10%, so really quite low. If you look at something like cashless payments, which in the UK now is becoming the norm. In fact, I think a lot of people don't even carry cash around with them. But in Japan, 80% of transactions are still done in cash. And one of the reasons for that is because people are relatively older, they're slower to adopt, but our view is that they will adopt. There's nothing inherently special or different about Japan. It will go in the same way. And if we can work with our colleagues based in London or New York or Singapore and look at trends elsewhere and then find the Japanese equivalent, it can be very powerful. The cashless payments is particularly interesting because, as you probably know, there was a consumption tax hike in Japan last year from 8 to 10%. But if you use a cashless payment to pay, in many stores, you're exempt from that increase. And that's really been quite a strong catalyst for people to change their spending habits, and it's also given a rise to good investment opportunities.
We're seeing a lot in the headlines at the moment about Carlos Ghosn and what's happening at Nissan. I suppose it underlines the fact that ultimately you're a minority shareholder, investing your investors' capital a long way from home. What are you looking for in terms of safeguards before you deploy that money in a stock?
Well, I think a lot of this comes down to a rigorous investment process. And for every company that we cover and hold, we have a 98-question checklist looking at ESG considerations, many of which relate to governance. Now, of course, we didn't know that Carlos Ghosn was going to be arrested. We certainly didn't know he was going to get into a musical case and escape to Beirut. But we did identify many red flags at Nissan early on. In fact, it has the second highest number of warning signs of any company in the Japanese market. And so, we hadn't owned Nissan. And it really doesn't tick any of the boxes we're looking for in terms of good industry, a high quality company with sustainable margins and a good growth outlook. It just doesn't tick any of those boxes either. So it'd never be a company we'd likely to own.
On the whole, do you think you get better returns for investors by avoiding the disasters or picking the winners?
Well, I think it's got to be a bit of both. Yeah. But I think in Japan, it's very important to stay clear of certain stocks and certain sectors because they are still very large parts of the benchmark. So, autos, as an example, is 10% of the index, and then you have another 7% in banks and steel and consumer electronics. These are all significant sectors in Japan, but they all have difficult outlooks, difficult competitive environments, and it's very important that we avoid those while at the same time being able to focus just on those really strong long-term ideas in some of the sectors that we've talked about.
Turning to the resources on the fund, you've got a new deputy manager, Miyako Arabe, who came on board in May. What's the story there? How are you changing the team?
Well, we have a very large team based in Tokyo. I mean, it's one of the key points about JPMorgan Asset Management. We have 25 people based on the ground. I know that sounds like a strange point to emphasize, but it's extremely rare to have a team based on the ground in Tokyo. Most people do the fund management based out of London or New York or other places. And we have been there for well over 40 years. We're very committed. That makes a big difference. And because the sell-side coverage of Japan, brokerage coverage, is so limited, in fact, half of companies have 1 or 0 analysts covering them. Being there and being able to meet all companies at IPO and meet any company anytime is becoming more of an advantage. We also want to have as diverse a team as possible. We have people from many different nationalities, men and women from different backgrounds, and it's great to have a Miyako on the trust.
Currency is something that whenever you invest overseas you have to think about. How do you manage currency risk in the portfolio?
Well, we look at, obviously we look at our overall FX sensitivity because I don't want us to ever take unintentional bets. So because we bought stock A and stock B and stock C, suddenly it's good for us if the yen weakens. Now, that's okay, but we need to understand that we've taken that bet. And in general, I would never want to do that with currency. I think we have good insights, differentiated insights on companies, but on the currency, much more difficult. I'd say I'd be lucky if we had a 50% chance of getting that right. So we don't take explicit views on currency, but we are aware of what the overall impact of currency is on the portfolio.
What's the current gearing on the portfolio? What's that telling us about your attitude to the markets?
Well, currently we're about 14% geared. I think what it tells you is mostly that we can find great stocks to invest in. We're not really taking an explicit view about direction of markets over the next few months. That's really not how I work. It's, do we have sufficiently good ideas for the portfolio that we want to own in the long-term view? And I think that relatively high level of gearing shows you that, yes, we do.
Nicholas Weindling, thank you.
Thank you.